What is going on, everyone? Sorry. I'm pulling up my Charles Schwab real quick. Welcome back to another Dividend Happy Hour. Hope everyone's having a great day. Happy Friday. Hope everyone had a great week as well. Crazy week on the stock market. I don't know about you guys, but I'm sitting at all-time highs in the portfolio right now, and I so apologize. I'm trying to pull up my transactions for the week because I'm looking at the live chat. You guys are talking about what you bought this week, and I was sitting here thinking, I don't even remember what I bought. I'm looking here. Today's the 15th. So, okay, a couple days ago, guys, I bought a little more WP Carey, a little more Procter and Gamble. That's what it was. Okay. Sorry about that. How's everyone doing? How's everyone doing tonight? Good to be back with you guys for another live stream. Let me show you where the portfolio is at. Like I said a moment ago, I was sitting at all-time highs, or am officially sitting at all-time highs just from the craziness this week, guys. We are sitting at $107,394. Pretty wild. Pretty wild. We're almost at 110K. If we have another week next week, like this week, we will definitely be there. So I don't know. And I think I put this out on Instagram a couple days ago, which, by the way, if you're not following me on Instagram, definitely do so. I'm posting, basically daily portfolio updates over there. I'm posting those short little portfolio review videos from Blossom over there as well. So a lot of good stuff happening on Instagram. I'm also posting my runs. I actually just got back from a run right before live streaming with you guys tonight. But I was posting about this on Instagram a couple days ago saying, it's cool. It's cool to be at all-time highs. It's cool to see the portfolio value going up. And by the way, just sidebar, this is something that we've definitely covered here before on the channel, definitely here in the live stream. But anyway, it's cool to see the value going up, but at the same time, it kind of makes me nervous when things go up too fast, when it seems like things have been too good for too long. It kind of makes me think that there's, we're bound to head in the opposite direction, and that's what's on the horizon. I could totally be wrong. Obviously, I have no idea what's going to happen, but I just kind of, when I see the portfolio value at all-time highs, when I see it going up and up and up, it's kind of a mental cue for me to start preparing myself for it to start doing the opposite. Now, fortunately, I'm in a pretty decent spot right now. I mean, you guys know, with the sale of Starbucks, that left me pretty flush with cash. I put most of that back to work, but I still have, actually, I need to update this with the dividends that I got this week. Really good week of dividends too, guys. Actually, today was really good. I got paid from Realty Income, Main Street Capital Corporation, Procter & Gamble, and AbbVie, and I had a really big dividend come from EPD yesterday. That was about $75. So it's been a good week of dividends, but with all of those, my cash position is now 1,340.88. Okay. Cool. So then that's now the portfolio balance, 1,560. So all of that's to say, I feel pretty well positioned for a little pullback. I'm not in a huge rush to put this cash to work. It's not a whole lot of cash, but yeah, I'm not in a huge rush to put it to work. Truth be told, I'm kind of at a point too where I'm just not really sure. I'm not really sure where I want to put it. I could put it into like a Blue Owl Capital Corporation, because I'm kind of, right near my cost basis with that. I could put a little more into Procter and Gamble like I've been doing. I could put some more into WP Carey, but I'm pretty happy with where all of those positions are at right now. I could put some more into Zoetis as well. That's another one that I should mention, but same thing. That's already a very full position. What is it right now? It's 9.3% of the portfolio. It's actually like right up there with Visa. So I don't know. I don't know. I don't know what I'm going to do, but for now I'm just sitting on that cash. Anyway, enough rambling over here. We got some stuff to get into, guys. Real quick though, I do want to shout out Red Hawks for the $5 super chat. This is a great question. So we'll answer this right now. And by the way, guys, if you have any other questions throughout the stream, just drop them here in the chat. As I go through the chat and get caught up with everything, I'll be sure to save these questions so we can go through them later on in the live stream. But Red Hawk wants to know, do you think it's reasonable to add some JetQ with SHD and VOO, or do you think it won't last long term? I understand the tax lag as well. So it's a good question. I think it just really depends on, I think it depends on a few things. I think part of it depends on how far away you are from using that income or from retirement. I think the closer you are, it makes more sense to add something like JEPQ, but I'm also a bit wary of covered call ETFs in general. I'm just so much more partial to buying companies that actually generate profits, and that's how that's where the dividend income comes from. Is from the profits. To me, it's just more straightforward. With covered call ETFs, I mean, you kind of touched on it in the question. Do you think it won't last long term? I really don't know. Um, I think there are a lot of covered call ETFs that will not be around this time next year. That's a can of worms that we don't have to get into. But I do think the JEPIs and the JEPQs of the covered call ETF universe are probably two of the more tame. They're kind of more. They're some of the more tame covered call ETFs. So I don't really have an issue with those. I actually used to have JEPI back in the day. So that's one side of it. But on the other side of that, with that said, I actually think JEPQ could offer something that will not be found in SCHD and VOO. So in terms of building like a well-balanced all-weather portfolio, I do think it adds something to an SCHD and VOO combination. So I don't necessarily think it's a bad idea. It just kind of depends what your goals are, where you're at in your investment journey and kind of what you're looking for out of your portfolio. But yeah, I think there's an argument to be made for it. I also think there's an argument to be made against it. And truth be told, I don't know that I have a serious opinion about it either way, but hopefully that helps you understand both sides of the coin. So, but guys, let's get into it. I mean, we got to kick this thing off. We're already 10 minutes in the stream. Let's kick this thing off. Actually, 8 minutes. Let's kick this thing off the best way we know how. Grab whatever it is you're sipping on. It is Fresco Clock over here. Crack this bad boy open. Ooh, yeah. Grab whatever it is you're sipping on, guys. Cheers. Here's to you guys. Thank you so much for tuning in tonight and hanging out with me. I was looking forward to this one today. It's good to be kind of back in like a normal routine and back on like the weekly live stream schedule. And as always, I'm so stoked to be here with you guys, and I appreciate you tuning in. So first and foremost, here's to you, but also here's to the dividends, to the pursuit of that sweet, sweet cash flow. Because really, at the end of the day, that's why we're all here, right? To talk dividend stocks and come together over this thing that we love so much, that brings us so much joy and gives us so much, really, too. But anyway, cheers. Oh, that's so good. One more. Oh, man. Love it. I never get sick of Fresca. So good. Okay, guys. I see some of you have already done this, but let me know a few things in the chat. I want to know, number one, what did you buy this week? You guys already know. I see a question here from Rolex King. Cool name too. I like your image. What is that? Looks like a Submariner there in your image. Let me know if you have any Rolexes, what your watch collection's looking like. I'm rocking my Seiko Solar Diver here. But anyway, let me know, number one, what you picked up this week. I want to know what you added to your portfolio or sold. In the case of Midway Piper here, looks like he got rid of a few holdings. So let me know what moves you made in the portfolio this week. That's number one. Number two, what are you sipping on? What did you bring to drink to the Dividend Happy Hour? Number three, let me know if anything cool happened in your guys' portfolios this week. I'm sure a lot of us are sitting at all-time highs. But, feel free to share that. If there's anything else, you want to share with us here in the chat, anything you feel stoked about, let us know. We'd love to share in that celebration with you. But also number four, let us know if this is your first time tuning in to the live stream. In case it is, first and foremost, welcome aboard. So happy to have you tuning in. And just so you know, we typically do this live stream every Friday night, starting pretty much this time, starting at 5 p.m. Pacific time, 8 p.m. Eastern time every Friday night. It's always a lot of fun. As you'll see, there's really no rhyme or reason to the Dividend Happy Hour. It's just kind of like a random hour where we get to come together, sip some Fresca, or probably a Ghost or a Bang or something along those lines if you're Chris, and talk dividend stocks. It's a lot of fun. So yeah, let me know those things in the chat. Let me see. Matt here, sipping on some Canadian Dry. Very nice. Oh, dude, that's awesome. Almost 200K in the portfolio this week. Bought Waste Management, Blue Owl, UNH, and your 484th share of SCHD sold out of ADP. Nice. Okay. ADP, that's an interesting sell. I'd be curious to know like what prompted that, because I think ADP is a very high quality company. So yeah, I'm curious to know the thought process there. My man Darth's in the building. What's up, Darth? There we go, Brett. Big bad Brett. My big highlight for this week was getting 100 shares of both SCHD and SCHG in the taxable. Man, congratulations, 100 shares. Really cool milestone. So good job. Oh, there we go, Striper Kid. This is a big one, guys. I hit a milestone in another account that I have. 500 big ones. Crazy. 500K, $500,000 in one account. That's unbelievable. Okay, B Hall here picked up some Hormel, CNC, Bloomin. I don't know what CNC is, but Bloomin, HE is Hawaiian Electric, I think. And then I'm not sure what HAFN is, but nice little shopping spree there, it looks like. Trista just passed 50 shares of SCHD. There you go. There we go. That guy reached $20 a month in dividends. Unreal. Good job. Get yourself a nice Chipotle burrito there if you want, with some chips. Yeah, Pat says start a new position with that cash. It's something I've thought about. Like maybe I just finally put it into Rollins, just finally bite the bullet. Wouldn't that be something? I would feel so stupid if I did that. Like after all this time of being like, no, I'm going to be patient. I'm going to be patient. I'm going to do it right. And then just biting the bullet and doing it. I don't know that I'd feel right about it. Okay. Cool. Aussie dividend. $2 in Costco. Nice. Secured first home. Good job. New work contract. Portfolio all-time high. Started a new position in Google. Life 360 PE dropped 700 to 240. Okay. Yeah. Bass Hole wants to know what I do for a living over here. Yeah, I'll save that one. We'll circle back to it. Nice. Rich sipping a Modelo with a lime. Classic. Yeah, Miguel, to be honest with you, I don't have an opinion on this. And truth be told, if you guys ever come to me with a question like, should I buy this? Should I sell this and buy this? Or what do you think? Should I buy stock X, Y, or Z? Or should I sell stock X, Y, or Z? I'm never going to give you a straight up answer. I'm just not going to, because number one, I really don't have I don't know you. So it's kind of hard for me to know how to even have an opinion on that. Number one. Number two, I don't know that I really do have an opinion on it. And number three, I just don't think and this might sound mean, so I apologize, but I just don't want the responsibility of making those decisions for you. I think if you're going to be in charge of your portfolio or managing your portfolio, you need to be the one to make those decisions. And so I really don't want to have any sort of involvement in or influence on those decisions. I think that those are things you need to decide for yourself. Hopefully all of that makes sense. And hopefully that didn't come across too, hopefully I didn't sound like a jerk in saying that, because that's not my intent. Ooh, this is an interesting question from Basil about what happens when an ETF shuts down. Actually, let's cover this one right now. This is an interesting question. Let me know in the chat if you guys have any insight on this, because it's something that I'm a little bit fuzzy on. I know I looked into it. I looked into it at one point. But I'm sure more than one thing can happen. My guess is that, and my thought is that if an ETF shuts down, like let's say hypothetically, SCHD just decides to not exist anymore. They decide to shut the ETF down. I would imagine that they would just give the shareholders, they would just liquidate that position for you, and it would convert to cash. That's the only thing that I could think that would happen to it. Maybe there's something else, like maybe they offer to put it into a different ETF or something, but I would imagine that it just gets converted to cash. Whatever the value of it is. Okay. Nice. I see. Ooh, this sounds good. Conway. Victory Dirt Wolf Double IPA. What is the I'm curious, what's the ABV on that? That one sounds like it's packing like maybe like an 8 or a 9%. I'm curious. Sounds good. Yeah, this is what I think would happen. You just get the money from, yeah, exactly. They just liquidate it. Darth sipping a Powerade. Nice. There you go. There you go. Ooh, Tony sipping some Maker's Mark. Nice. Ooh, Clayton picked up some Novo Nordisk. Cool. Nice. Looks like it's Rourke's first time tuning in. Welcome aboard. Happy to see you here. Okay, so Matt, here's some more insight on ADP. I sold out of ADP mainly because it was a very small position. Okay, makes total sense then. Yeah, that totally makes sense. I don't blame you, and it sucks. Like, it sucks when that happens. When you've got those good companies, but they're just such small positions that they're not going to move the needle. I've talked about this before, but that's something that I'm kind of dealing with AbbVie right now. But it's like it's been a good place to park my funds. And actually, on that note, I'm just now seeing this. I'm officially across a 100% total return with AbbVie. That's pretty wild. Just now seeing that. This is the first time in a while too, guys, that there's no red in my portfolio. Everything's up. Everything's up. Portfolio's looking it's looking good, but like I said, it's looking a little too good right now. It's got me worried. Oh, Tony, this is an interesting question about Walmart's dividend. We'll save that one. We'll save that one. My man Alfredo in the building with the $10 super chat. Thank you, man. Thank you so much. Bought QQQI, SPYI, all the high yielders, IWMI, IAUI, and BTCI. Just reached $1,000 in monthly dividends, and I'm sipping on some water. How has your week been for you so far, ma'am? My week has been really good, actually. It's been a great week. Well, obviously, we talked about it being good in the portfolio. Got some good workouts in. My wife made chocolate chip cookies a couple of days ago, and yeah, that definitely enhances the week. What else can I tell you guys? I'm here with you guys on a Friday night. It's nice, like I said earlier, it's just nice to be back in the routine. I started a new book. I don't have it here sitting here with me. I finished a book I finished a book yesterday morning. I started a new book last night. That one's right here. Let me find it. So, okay. I got for my birthday a few weeks ago, about almost a month ago at this point, I got a new stack of books. I got 4 different books. One of them was this one right here. It's Jonathan Livingston Seagull, which is basically, I'll read you the back of it, but it's a short little novella. It's only like 100 pages. But basically the premise is, this book is a song for spirits who have lived so long and so quietly by themselves. Jonathan Livingston Seagull is a story for readers who know that somewhere there's a higher way of living than scuffing the tracks of others, a story for someone who yearns to fly. It's a reminder that the path for us to follow is already written within. Others may watch, they may admire our resolution or despise it, but our one freedom is to love and to choose to live every day of our lives as we wish. So, the message was right up my alley. I first heard about this book from listening to, I think, the Art of Quality podcast. It was some investing podcast. And they had talked about, I think it was Richer, Wiser, Happier. And they talked about this book and recommended this book. And like I said, it's super short, so I thought I'd pick it up. Seemed interesting. Started it last night, finished it in about 40 minutes, super quick. I mean, half the pages are like, I'll show you. half the page, half the pages are just like pictures of seagulls, and then the pages with words are like, super easy to read. So I finished that, and then I started a new book this morning. I started The Compounder's Element. Let me see if I can pull it up. I'm only about 20 pages into it. Compounder's Element by, I think, too, the author of this book. It's this one right here. I think the author of this book is the one who was talking about Jonathan Livingston Seagull. I think it was him in this podcast that I listened to. So anyway, I'm reading this book. I just started it. This is the first investing book I've read in a while since reading Dear Shareholder, which I truthfully was not a big fan of. It was kind of boring to me, to be honest. This one seems good so far. It's basically, how do I explain it? It's basically about how and why you should take the patient path to prosperity. It's about basically, in being okay with the journey to financial freedom taking a long time, and also just finding enjoyment, not so much in the end destination, which will be enjoyable, but finding enjoyment in the journey itself, which is also something that we've talked about before. So I'll be really interested to dive into that. I'm going to definitely take some notes on that book. But yeah, that's another cool thing that happened this week. So, oh, nice. 8.7%. There you go for the beer, for the IPA. Dang, Darth, I'm sorry, man, that you have COVID. That's not good. Yeah, I feel better, man. Ooh, Falcon, $5 super chat. What is your system for deciding, number one, how much to allocate to each holding, and number two, when to sell a holding? This is a great question. I'm actually going to screenshot this so I can revisit it in an upcoming video and newsletter and stuff. Okay. So let's see here. So let's just take it one by one. System for deciding how much to allocate to each holding. It's not an exact science. I think it's more, for me, it's kind of just more of a feeling. And I'll give you two examples of how I recently did this. So I'm going to hide this real quick. Let's go over to the spreadsheet. And I didn't mention this earlier, guys, but you can download the spreadsheet in the description. There's a link to it right there. Use it to start tracking your own portfolio. So one example is, let's start with Clear Secure. Okay. So I started my position in Clear. I don't know exactly when it was. I think it's been almost a year at this point, maybe not entirely a year. But I look at this company as probably being the riskiest stock in my portfolio. It has definitely been the most volatile stock, but I also look at this one as being the riskiest. And by that, I mean, it's the one where I feel like I have the highest chance of permanently losing my investment. And with that said, looking at the financials, everything's going in the right direction. The revenues growing very aggressively, earnings are as well, free cash flow. There's no debt on the balance sheet. The dividend growth so far has been great. So there's a lot of good stuff going for it. High returns on invested capital too. But just because of the nature of this business, a lot of their revenue is dependent on what they do in airports. And I think there's a pro, and there's pros to that, and there's cons to it. The pro is that this is actually a pro and a con. It's a heavily regulated space, right? To do what they do in airports, they have to get all sort of security clearances. They have to work in conjunction with TSA. There's so many hoops that they have to jump through, which number one is good because it helps prevent new entrants from coming in and taking over their space and doing what they do. But on the other side of that, they're also kind of at the mercy of these regulatory bodies, and also, kind of at the mercy of TSA. And so that poses a risk that could definitely impact this business in a pretty meaningfully negative way. So, and that's what I mean when I say there's the greatest chance that things can head south for this company. They're doing a lot of things to try and diversify their revenue, but that's going to take some time to play out. So in thinking about all of that, even though I'm really hyped on this investment, and so far it's actually been really good, I'm really happy with the direction this company's going, and I'm now seeing some pretty solid returns on it. I'm up about 18%, including dividends. But still, looking at this or considering this as the riskiest position in my portfolio, I knew that I didn't want to make it a huge position. I knew that I didn't want it to be right up there with the likes of a Visa or like with a Zoetis, which is another example I'll get to, or even a Johnson & Johnson or a Procter & Gamble or a Realty Income. Just because it was riskier, I wanted it to be a smaller position in my portfolio. So, it's now at about 5% of the portfolio. I personally have invested about $3,700 in it, and I'm okay with this. If this were to go to zero, it would suck and it would not feel good, but it wouldn't completely take me out of the game. Okay. I can lose that money and I can still survive. My portfolio will still persevere and I'll still be able to climb out of that. You know what I'm saying? And so that's one example. Now, on the other hand, let's look at Zoetis, which is the newest addition to my portfolio. Prior to this, it was Clear Secure, but Zoetis is the newest addition. It is right now, it's 9.3% of my portfolio. And I really did not plan for that to happen. This is one example where I probably didn't put as much thought in terms of position sizing. Let me rephrase that. I didn't put as much thought into the position sizing when it came to Zoetis. I kind of just have been buying while the getting's good. I just think it's been at a really great price for so long that I've wanted to take advantage of that opportunity. And so I've really let it become a big position in the portfolio. And only recently, like only in the last couple of weeks, have I started to look at this and think, okay, it's getting to be a bit not too heavy, but I think I'm pretty content with where this position is at. Even though I feel really good about this investment from a long-term perspective, just in the case that I'm wrong about it, I kind of want to protect myself against potentially being wrong. And so I don't know that I'd want to build the position too much higher than this. This is kind of at the top end of where I like any one position to be. 10% is kind of like where I like to cap it on the high end. I don't really like any one position to be more than about 10% of the portfolio. I will say Visa would be an exception to that though. I would easily have 20% of my portfolio in this position. And that's one thing, to be honest with you, that's one thing that I wish I would have done differently. I wish that I would have gone heavier into Visa, but what happened was I started buying it and I was buying it very, very consistently. And then it kind of started to pull away from me. There was a decent amount of time where it was hovering between 270. It even dropped down into the 240s. So I was buying it all through that time. But then it started to get up into, 280, 290, 300, 310. Now it's at, 340. We've seen it at 350. Looks like in the last 12 months, we've seen it as high as 375. So it started to get a bit rich for my liking, but I would have been totally fine continuing to buy that one. I'm kind of rambling, but hopefully that does help paint somewhat of a picture. I think to really close out that question, it's just a combination of like, can I continue buying it while the valuation's good? Typically, in most cases, if I can buy a stock at what I think is a good valuation, I'll just keep buying it because I know there will come a point in time, like with Visa, and actually like with Procter & Gamble for a long time, where there won't be a good time to buy it. You know what I'm saying? And during that time when it's not a good time to buy it, which is a good problem to have, you'll have wished that you wanted to buy it more. So it's a combination of that plus also, how risky do you think the position is? I think I try to balance those things out, or those are the things that typically come to mind. And I'm sorry for making that such a long answer. But number two, when to sell a holding? Going back to the question here. Number two, when should you sell your holdings? Yeah, that's a tough one. That's almost tougher than buying. I think, I think the main thing for me, and this kind of ties into AbbVie too. I was talking about earlier, like it's only such a small position in my portfolio now. I've kind of thought about maybe getting rid of it, but man, it's been a great investment. and it continues to be a good investment. So, if that continues to be true, why not just hold on to it? So with that said, I'm not so sure that I would want to sell a good position if it's even if it's a small position in my portfolio, unless I thought there was a better use for that money. And maybe there is, I don't know. But at the same time, like I said, AbbVie's been chugging along. So with that said, I think the main reason that I would choose to sell a stock is exactly, why I sold Starbucks recently. It's just because it just seemed like things have changed with the company. I was getting concerned about it from a fundamental standpoint. And it just, in my mind, I wasn't looking at it thinking it was a good investment anymore. And so I think that that's a pretty big reason to sell. Like if you can look at any of the companies in your portfolio and objectively say, yeah, this looks like it's going downhill. I think if you have those thoughts and you keep coming back to those thoughts on those companies, it's a good indicator that it's time to cut and run. So I think that's the main thing. Basically, if things changed at a fundamental level for any of your companies, I think that's a good indicator that it's time to sell. So hopefully that makes sense. Ooh, JR's got or maybe Junior it is. JR or Junior. Let's see. No, Striper is responding to Live here. Thoughts on Salesforce? We can look up Salesforce. So I'll give you thoughts on stocks. Like, what do you think about this company? What do you think about that? I'll do that. But what I won't do is if you ask me, like, should I buy Salesforce? I'm not going to tell you that. Should I sell Salesforce? I'm not going to tell you that either. So I think, what are your general thoughts is a bit different, and I'm happy to do that. And we'll go through SnapStock and look up Salesforce here pretty soon. So let me just get caught up here in the chat, guys, because I'm a bit behind. Yeah, I've got a few super chats here that I need to catch up on. Thank you guys so much for the super chats. Okay. Okay. Sorry, guys. Bear with me. Let me just spend a minute getting caught up here. Julian's got a good question. Let's see. Kevin Burgess, I see you there in the chat. What's going on? Okay, so Rod, $5 super chat. Thank you, my friend. What do you think of Salesforce, basically? Yeah. So we'll take a look at Salesforce. We'll take a look at BBWI2, which I don't, off the top of my head, I don't know which one that is. So we'll take a look at that. And I think we'll jump over, guys, to the saved questions. It looks like I have 10 questions saved. So we'll go through these. I think some of them we've already covered. Some of them are the super chats. I think thought there was one more super chat that I missed. Yeah, from Thieve, just for giggles, thoughts on Groupon. We'll look at Groupon on SnapStock. I know it's not a dividend payer, but let me know what the ticker symbol is too, because I don't know off the top of my head. Okay. So we answered that one. We answered that one. Okay, so let's go through these super chats here. We'll start with this one on Groupon. What is the ticker symbol? I could probably just type Groupon. There it is. Okay. I'm all over the place. Sorry, guys. Okay, so over here on SnapStock. Geez. Okay. And by the way, guys, I'll link to it in the pinned comment after the stream, but you can start using SnapStock to do your own stock analysis, your own stock research. There's a link to it at the top of the description. And we're making we're always working on this thing. It's been so fun. The most recent addition that we added to the platform is this right here. It's the red flags feature, which is exactly what it sounds like. So basically, if there's any like financial red flags, whether it's like growing debt or declining earnings or, you know, low interest coverage or anything like that, it'll show up as a red flag. So here with Groupon, pretty rough day for the company, down 10%. Really solid year though. It's up over 100%. So definitely has some solid momentum to it, right? But just based on these here, nine red flags, very low snap score. It's scoring low in pretty much every department. Maybe it is a dividend pair. It's not looking good. So let's go check it out. Let me see here what's in the. Yeah, okay. Thank you guys for sending the ticker symbol. Okay. Let me take a sip of my Fresca real quick. Sorry. Let's scroll down. Yeah, I mean, oh my goodness. Do I even need to say it? Do I even need to say it, guys? I mean, why would you want to invest in a company like that? What's the draw there? And furthermore, like, why is this stock that's losing money, declining sales, like hardly generating any free cash flow? Why are they up over 100%? That just doesn't make sense to me. Negative margins, negative net profit margin, very high gross margins, though. I will give them that. That's very impressive. Yeah, debt situation actually looks pretty good too. In the trailing 12 months, they have a net cash position, which is great. Yeah, so debt doesn't look to be an issue. That's really good. Oh, they've been issuing a ton of shares, or they just recently did. It looks like they upped their shares outstanding by 25, 30% just in the last couple of years. And, you know, the returns on invested capital, returns on assets, all that stuff, not looking really good either. So, you know, I just don't really, Aussie, you're funny. Yeah, I just don't really, I don't really see why anyone would buy this. It's crazy. It's just crazy to see this kind of thing, right? Where it's just purely driven by momentum because it's clearly not driven by financials. I don't know. And Thief, thank you again for this. I was wondering why I had this stock. It turns out I had a share from back when I used Stash. Man, Stash. I used to use Stash back in the day too. I started off with Acorns, and then I wanted a little bit more control, so I went over to Stash. And then same thing with Stash. I wanted a little bit more control beyond what I could get from Stash. So that's when I went over to Robinhood, and then the rest is history there. So yeah, I will not be touching Groupon. No siree. Okay, let's go over to this other question from Rod Wave. What do you think of Salesforce? Who else asked about Salesforce? Okay. Okay, yeah. So let's take a look at Salesforce. Let's take a look at BBWI. Start with CRM first. Let's do this. Okay. Let me hide the comment. Okay. So, what do we see here with Salesforce? Down 8% in the last year, so it's definitely been underperforming the market. Pretty tough year. Wow. It's actually right there at its 52-week low, basically. Free cash flow yield's pretty decent. And, you know, kind of like Alphabet and Meta, they were a relatively new dividend payer. Only one red flag. The snap score is not great. Yeah, I mean, it looks like the dividend stats are really going to bring down this score, but it's like I said, they just recently, within the last 2 years now, initiated a dividend. So I'm not really going to hold that against them. I'm guessing they have like low returns on invested capital and stuff. But the valuation looks pretty good. I mean, price to free cash flow is definitely lower than average. It's like half the average. The free cash flow yield is about twice the average as well. So the valuation's looking great. Salesforce has been an incredibly strong grower. I mean, that's fantastic. Look at that. That's a work of art. That is pure class right there. I really like that. High margins, and actually increasing margins as well. The net profit margin's been a bit spotty, but the earnings per share has been pretty spotty too. So that makes sense. But otherwise, I think the margins look really good. Debts, yeah, I mean, they've done a great job of either paying down debt or just like stacking cash. They actually have more free cash flow coming in than they have net debt on the balance sheet. So yeah, that's a big plus. What is the red flag here? So, okay, so they're giving it a red flag, or SnapStock is giving it a red flag because the debt really increased. It's really increased basically from 2020 to here. So even though they are paying down the debt, still from here to here, it was a huge jump. And so it's counting that against them. But this is fine. The debt situation's fine. Yeah. So the one raise that they have made, have they even officially announced a raise yet? I don't know if they have. Let's look at the quarterly. Oh, probably not. They probably paid out some special dividends here, if I had to guess. I don't know for sure because I really don't keep super close tabs on this, but that would be my guess. That's why we're seeing these spikes, which is crazy. If that's the case, their special dividend is larger or the same size as their normal dividend. So, and the dividend's very well covered too. 37% earnings payout ratio, about 20% free cash flow payout ratio. So that looks good. I will say, like, the one not so great thing is they've been issuing a ton of shares. Looks like the last couple of years they started to buy some of them back, but prior to that, they really issued a lot. The returns on invested capital are not great yet, but the last couple of years it's jumped up. So we'll see where that goes from here. So overall, I'd say there's some good, there's some bad. From a dividend standpoint, it looks like it has all of the makings to be a solid dividend grower. The valuation's good. Like I said, the earnings per share is a bit spotty. I don't really know enough about the company to know why this is. But yeah, I like it. I think it's looking good. I'm actually surprised to see the returns on invested capital so low. And I hope that they increase. So what was the other one? BBWI, right? I think it's BBWI. Oh, Bath and Body Works. Yeah, I think you mentioned this, or someone else mentioned this in the chat. So yeah, a lot of red flags. Bath and Body Works. Yeah, the performance, it's really gone down. Wow. Very high free cash flow yield. The valuation looks great. The dividend stats based on this look great too. We'll see what's going on once we scroll down. A lot of red flags. Snap score is not great. So we'll probably expect to see like moderate margins, lackluster growth. Looks like very strong returns on invested capital. Nice dividend stats. Interesting. So let's see what we're up against here with this one. Okay. Wow. Okay. So I don't like this, I will say. So revenue has declined at best for sure over the last decade and stagnated more recently over the last 3 or 4 years now. 3 years. And it's actually even slightly declined since 2022. So I will say that's a bit concerning. Earnings per share, there's really not been much development there either. Let me get a little closer here. Earnings per share, there's really not been much development. Free cash flow per share is definitely trending in the wrong direction. And that's That's why it has a red flag, because over the last 10 years, it's gone down. Same thing with the revenue, the 10-year CAGR is down. So I don't really like that. Looks like the margins have declined as well. At least the free cash flow margin has. It's basically been cut in half since 2020 here. Debt's just a little bit above where I'd like to see it. I kind of look for a net debt to free cash flow around 5 or below. It's right about there in the trailing 12 months. In 2024, it was a bit higher. Interest coverage is definitely lower than where we'd want to see it. So I would say that the debt situation for me is a bit concerning. I don't know that I'd want to invest in it. So far, I'm going to give it a no, just because of everything that we see here in the growth department and everything that we see here in the debt department as well. So with that said, though, I don't know. And the dividend stats actually are not as great as I thought they were. I was expecting to see like some crazy dividend growth, but they really cut this dividend. And the only reason the 5-year CAGR is so high is because of what they've done since 2020. But these last 3 years, they haven't raised the dividend. With that said, despite the dividend looking to be very well covered. So it doesn't look like they will cut the dividend anytime soon, again, based on this. But I don't know, like a 3% dividend yield with not even a 3% dividend yield with no growth. I don't know. They're doing a good job of buying back shares. I'll give them that. And the return on invested capital are actually pretty crazy. So I'll give them that as well. So I don't know. There's definitely some good, some bad. I'd say the two most exciting things about this stock are, number one, the valuation, and number two, the returns on invested capital. Outside of that, it's not really one that I would be interested in, and it's not one that I would be interested in, and hopefully it makes sense why. So, okay, we've got a few more questions, guys. We've got 10 minutes left in the stream. We're going to try and bust through the rest of these questions here. So this one's from Rolex King. How much do you invest every week? This is an easy one. Every single week I invest $250. I do $120 in my taxable, $130 in the Roth IRA. I'd like to bump up the taxable contributions here pretty soon. Maybe I'll do that like starting next year. We're saving for a car right now. We're going to have a baby in the next couple of months. So maybe I'll wait till that's behind us to bump up my contributions. But with that said, at the same time, I don't think an extra $25 a week would kill me. So we'll see. Maybe you'll see me bump that up soon. Let's see. Okay, so Basshole, question if you don't mind, what do you do for a living? Chat 2, curious what we are all doing to earn our investing money. So, believe it or not, I actually do this YouTube stuff full time. YouTube, the newsletter, everything that, this whole, I don't know, every all this stuff that I'm doing, my gibberish here on the internet. This is what I get to do for a job. And I've been doing it full time now. October will be 3 years, which is crazy. I still pinch myself in disbelief that I get to do this, and I feel so fortunate. But yeah, this is my full-time gig. And I just hope, I'm going to knock on wood, I just hope that I get to do this for the rest of my life, because I truly love doing it. And it's the best job in the world. So it's what I do. Tony, why is Walmart's dividend so low? And where do you see their dividend going? I can't really answer why their dividend is so low. I don't know. I don't really know why they've decided to make the dividend what it is. And it's probably just the sweet spot between, what they can pay out and sustain. So, and that kind of touches on the second question, where do I see the dividend going? I see them continuing to raise the dividend throughout time. So sorry, not really a great answer. I just don't really know how to answer that question. JR says, what company has the highest Snap score. I have been loving SnapStock so far. Man, that's awesome. So did you become a member of SnapStock? If so, let me know in the chat. And if you did, thank you. Thank you so much for checking it out. And I'm really glad to hear that you're enjoying it. So the highest Snap score that I've seen, it was Visa. I think Visa and MasterCard are pretty close, but Visa has a 9.3 Snap score. No red flags. I mean, Visa's pretty much as perfect as they come. However, Novo Nordisk, I think is no, not Novo Nordisk. It was oh gosh. What's the what is the gambling the slot machine company? Maybe it was ASML. I know that's not so ASML has a higher Snap score, 9.56, so just slightly higher than Visa. Oh, Evolution, that's the one I was thinking of. Evolution AB. I think their Snap score is pretty high. So yeah, theirs is actually the highest. So ASML 9.56, Evolution AB is 9.58. This is the highest Snap score that I've ever seen. And I've never seen a perfect 10. Never seen a perfect 10. Yeah. Oh, Evo. Yeah. And if we scroll down, like, we'll see why. I mean, look at this, guys. This is unreal. It doesn't get any more picture perfect than this. Yeah. Very nice. Very, very nice. So yeah, that's the one with the highest Snap score that I've seen. So it goes Evolution, and then ASML, and then Visa. And then Julian has another good question here. So how do you use SnapStock to tell dividend safety and growth? It's nice that you link to SnapStock in the spreadsheet. Yes, thank you so much. And what he's referring to is this right here. So if you are using my free spreadsheet, if you just click this link right here, once you plug in a ticker, it will take you directly to that stock on SnapStock. So just a shorthand way to get there. But yeah, so how do you use SnapStock to tell dividend safety and growth? So that's a good question. I mean, kind of like how I'd use any other platform, right? Like the main things are going to be, as far as dividend safety, the main things are going to be the payout ratios. And obviously here on SnapStock, we've got two different ways to look at that. You can look at the earnings payout ratio, which measures how much the company is paying out in dividends in relation to the net income. The free cash flow payout ratio, pretty self-explanatory. It's the same thing, except how much they're paying out in dividends in relation to the free cash flow. And this is really the more important metric of the two. But how I use it to gauge dividend safety is I just look at the charts. I mean, where is the payout ratio? Is it low? Like, is there still plenty of dividend coverage? Is the payout ratio trending up over time? Like what we're seeing here with Snap-on, even though it is trending up, does that mean the dividend is in danger? Not necessarily, because the payout ratio is still 44%. And it's actually even lower looking at the free cash flow payout ratio. So these are the two main things that you'll want to look at. But I also look at the dividend history. You know, I look at the dividend per share and see how that's trended over time. And, you know, if a company, let's look at another example on the opposite end of the spectrum. Snap-on's dividend was very well covered. But if I'm looking at a stock and their dividend chart looks like this, it's like, that's a pretty, I don't even need to look at the payout ratio. Because that's a very clear indicator to stay away. You do not want to invest in any company that has a track record of decreasing their dividends over time. That means that if you're a shareholder, if you plan to be a long shareholder of this company here, which is Orchid Island Capital, ORC, chances are the dividends per share that you own will decline. Your cash flow return with this will go down over time. And that's the exact opposite of what you want. And it's crazy too. So if you had bought shares of this stock in 2022, you'd be getting $2.48 per share. Just 2 years later, you know, you're getting $1 less per share. So it's not good. It's not good. And what were we just looking at a few moments ago? Not Groupon. It was it was Bath and Body Works, right? That was another example. The dividend was pretty well covered, but still, like they really did a number on that dividend. They really cut it, and since then they haven't done much with it. So it's a combination of all those things, I suppose. It's looking at the dividend history, and it's looking at the payout ratios and cross-referencing the two to try and come to some estimation of whether or not the dividend looks safe and looks like it's heading in the right direction. Hopefully that makes sense. All right. Well, guys, I think that's we just ran through all those questions pretty rapid fire. Any last questions? We got time for one more tonight. What's up, Craig? Good to see you, man. Let me know if you guys got anything else for me, because it's almost time to wrap it up and go have some dinner and then some chocolate chip cookies. Got a big run tomorrow. I'm going to try and get, I think I'm going to try and get 10. I probably should try and get 10. Here's the thing, though. Here's the thing that's tough. I can run 10 miles, but it's like I'm going to need a good couple hours after that to just chill. And I need to script a video tomorrow, and it's going to be kind of a hefty script. So I feel like I need that energy and that brain power. I don't know. I'm thinking out loud. Okay, so Aussie Dividend, you came in first. We'll go with this one. Which private company would you buy if it listed on the stock market? If I had to pick just one, it would probably be Trader Joe's. It's just great business, cult-like customer base. Trader Joe's can really do no wrong, and it's always busy too. Always busy. And I'm very, very, very familiar with that business because we go there multiple times per week. So Trader Joe's would definitely be there. If I had to pick just one, if I could pick more than one, I would also add In-N-Out Burger to that. That would be a no-brainer as well. So, and I would probably own both of those even if they didn't pay a dividend. I just love both of those companies so much. Fast Eddie, what do you think about what Warren did? I think you're referring to him buying United Health Group. Truth be told, I don't know that I have a super crazy opinion about it. I think if he was going to buy it, now looks like a good time to do so. Insurance companies are definitely in his wheelhouse. So yeah, it seems like a pretty fitting investment for Berkshire Hathaway. Now, whether or not Warren Buffett himself actually made that decision, I think that's another story. Probably not. He probably did not. But yeah, I think that's a pretty fitting investment for Berkshire Hathaway. Let's see. Striper Kid, did you look at Walmart? No, I didn't look at Walmart. Didn't. SCHD, is it a good hold? I think so. I'm buying it every single week, holding on to it. A lot of people are not happy with SCHD just because it hasn't been performing this year. And I don't know. I always think that's silly when people say, "Oh, it's not been doing good this year. It's not been doing good the last couple of years." I'm still very happy with SCHD. Okay, guys, I think this is a great place to wrap it up, basically at the top of the hour. But I want to thank you guys all for hanging out with me tonight. It was a fun stream. Feel like it went by too quick. But I really appreciate you guys tuning in. I really appreciate all the super chats. Yeah, I just appreciate all of your support here on the channel. And with that said, I hope you guys all have a great weekend. Got a good video coming out tomorrow morning. I'm going to upload it actually right after this, talking about some cheap dividend stocks. So definitely tune into that. It'll be going out first thing tomorrow morning. And that's about all I got for you guys. I hope you all have a great weekend. Stay out of trouble. And I will see you in the next one.